Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
So chances are, if you're in the world of raising capital as of right now, end of May 2026, things are a little bit more challenging than they used to be, especially if you're in the multifamily space. Well, today we have a very accomplished capital raiser and real estate investor in his own right, Nick Elder. Yeah. Nick is all about raising capital, investor relations, getting people returns on their money. So he's part of a much larger group, much larger company, Ironton Capital. He's the head of investor relations there, but he also has his own portfolio of over 50 rental units. So he's got experience on both sides of the table. Nick, welcome to the show. Great to have you.
Thanks for having me, Dave. Yeah. Awesome to be here, man.
So tell me a little bit about, well, let's start with the personal portfolio. What does that look like? What are you personally investing in 2026?
Yeah, so me and two partners in 2023 and 2024, we bought two apartment buildings, mid-sized multifamily in Northwest Arkansas. So we had a 25 unit in Fayetteville, about a mile and a half from U of A. And then we bought a 28 unit in downtown Springdale in late 2024. Both transactions closed like within a week of Christmas, which is kind of funny how that worked out. Had to get that cost seg study in at the last minute. But so that's the portfolio. It's a classic value add. As you know, you're buying, rents were $300-$400 under market, spend about $20,000 to $25,000 per unit renovating and bringing the rents up, in line with market. So that's the general business plan, classic value add plan for the properties there.
Have you turned them around already? Have you got them optimized?
We're very close. Our 25 unit, 25 units gone through some challenges as the whole multifamily industry has with occupancy, with the supply that came online in the last couple of years. But we finally hit 96% leased, pre-leased, 92% occupied, and the 28 unit, we're a couple leases away from 90%, wrapping up the last two units of the renovation plan. So
good.
Feels like we're in the final stretch.
Yeah.
Excited.
Congratulations. All right. Well, hey, that's great. So tell us a little bit about Ironton Capital. What do you guys do? What do you invest in as a company?
Yeah, so we're a diversified fund. We've got, whether you're an investor looking for growth through our real estate equity offering, or you're looking for consistent cash flow, or we have two debt funds. We like to think that we really suit the investor regardless of what their goal might be. So with our real estate equity offering, typical fund, our national diversified fund, we have about 5 to 10 commercial real estate investments packaged up within that fund. An investor gets to get diversification across those assets with the low $25,000 to $50,000 investment. Yeah, typically we're investing in multifamily, a lot of ground up construction or value add, and the rest of the third of the portfolio is usually industrial, warehouse, self-storage. We do some residential for sale projects locally here in Denver. We know the market really well. We like some of those quick turnaround projects to blend with more of those 4 to 6 year time horizon type projects. So that's a real estate equity offering. It's a liquid 4 to 6 year hold. Yeah. I think the value proposition there is that, a regular investor who might want to get that amount of exposure, diversification might need millions of dollars of capital to accomplish that. A lot of investors don't have that, but they can get that exposure with a $50,000 investment and get a diversification portfolio that, a typical, maybe multi-million-dollar investor can accomplish on their own. So that's the value proposition there. And then we have an income product, non-correlated income product, and then a hard money loan debt fund as well. So if your focus is cash flow, maybe you're near retirement, in retirement, you've grown your capital enough, you don't want the illiquidity that comes from something like that. We have the cash flow options for investors who want consistent payouts every year.
All right, cool. So you got different options, different boats that float different folks kind of thing.
Exactly. Yeah.
So, hey, tell me something. How long have you been in the investor relations capital raising side of things? When did you get started with that?
A little less than 4 years, actually. Okay. I started after a layoff in my pharmaceutical sales job. So that happened in 2022. And so, about 4 years.
Big change from pharmaceutical sales to investment sales. So what have been some of your big takeaways over the last 4 years yourself professionally when it comes to raising capital and working with investors?
Yeah, I mean, most of my adulthood has been in just a crazy bull market, both in the stock market and real estate. And it's been really interesting to kind of, go through this period now where we've been in a prolonged interest rate period. We've seen multifamily values come down pretty significantly. And we've seen what's happened in the industry from a very low rate environment to a high rate environment and what's transpired over the last 4 years. I think the key thing is, right now, it's been so difficult to raise capital for these illiquid opportunities or your 4 to 5 year hold opportunities. I think investors are looking more at how are the returns being generated? Are you manipulating a cap rate? Are you factoring in rent growth, and is that driving the returns and makes it look good on paper? Or is there a current return that I'm looking at, like a cash on cash return I'm looking at? And I'm seeing more investors gravitating toward, what is my downside risk or my risk of losing all my money? And then ultimately, what are the returns being generated by going into the project today? Mm-hmm. And so, really having that dialogue with a lot of investors, of course, and that's why our income product has really provided a lot of that stability, because investors know they're getting about 10 to 11 to 12% a year. And it's not being driven by, a mythical number that's generating the returns, essentially, right? So
the theoretical returns, yeah.
Theoretical return, yeah, exactly.
Okay, so what the people who are investing in the real estate fund, the illiquid fund, who do they tend to be?
Yeah, younger investors. Maybe they've got a retirement account, a self-directed IRA. They can't touch it for 15, 20 years anyway. Yeah. So, they're willing to take a little bit of extra risk to get the higher rate of return. I'd say more often it's those folks, or, being in Denver, a lot of our investors have built a nice rental portfolio over the last 20 years, but there has now come into the market a lot of legislative risk. And so they're really starting to transition out of their active landlord phase into their passive investment phase in life. And, they still believe in real estate. They believe it's a good time to invest. And so they might be allocating some capital into the equity fund and then some into the income fund. I'd say that's probably two of our, most common types of investors.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Interesting. Okay, very cool. Yeah. That's on the real estate side of things. And in general, because it's your job, what are you finding is working best for you in 2026 for connecting with new investor prospects besides referrals?
Yeah, I mean, LinkedIn is a big driver. We brought on recently a new investor relations guy who's just very well connected, very heavy on networking. And so, really it's just getting in front of as many people as possible is really the name of the game right now. Trying to get new investors. We're tapping into our networks, trying to build a brand, such as on podcasts like this. Mm-hmm. Or, just getting out there, going to meetup events, networking events, and, just getting connected to people through introductions, whether they're investors or not. So it's just been doubling down on getting in front of as many people as possible.
What kind of groups do you find work best for you guys these days?
Yeah, we started to establish some more partnerships with some IRA groups. So there's various IRA companies out there that have allowed us to come on, introduce non-correlated asset classes to their database, non-soliciting, but, we're just providing value.
So what does that even mean? Non-correlated asset classes, big fancy term. What does that mean?
Yeah. So our medium-term income fund, for example, we are providing liquidity to medical service providers while they wait to be paid out on personal injury claims.
So factoring for medical services.
Exactly. Yeah. But doesn't matter what happens in real estate. Who cares what happens in the stock market? Like, the fund continues to perform. It's purely relying on those claims being paid out, which in most cases they're required to pay out by law. So, we're just stepping in, providing that liquidity, and that's what's generating the returns.
Okay. So you explain that to these IRA folks and show them what that asset class is all about. Educate them.
Yeah, exactly. Yeah. So, a lot of clients who've been at these IRA, who have a custodian account with these IRA companies, they're really used to investing in a real estate syndication. It's really nothing new to them. Just trying to introduce to them different pieces of diversification that is not just stock and bond market, real estate market, but there's also, a whole other class of non-correlated assets that perform even if those other asset classes are going up or down throughout the year, right? So just introducing these new ideas and concepts to investors is something that we're really trying to pursue here.
And it also sounds like you got a pretty specific avatar with local Colorado-based landlords, property owners who might be ready to get rid of them. But tell me a little bit about that and how are you connecting with those guys?
Yeah, we run a lot of educational webinars. Every month we do a real estate trends update, just purely speaking on some of the local and national real estate trends that are happening every month. We usually get about 100 people on those. Nice. Really, it's just putting ourselves out there as a resource and providing education. They know obviously that we are Ironton Capital and what we do. But that's how we really try to get in front of people rather than just constantly pitching people. Another thing we do, we educate a lot of investors through a webinar where we're educating them on, how can they tap into the equity of their portfolio. Most of those investors, again, since they've owned these properties for 10, 15, 20 years, they've got almost no leverage at this point in time. They've got a lot of debt equity, and we're just trying to show them, hey, here's some other options, and that's it. And here's how you can analyze your portfolio, determine what you need to do next if you want to do anything next, right? So just getting in front of as many of those people as possible. I don't think there's
So you're finding them on LinkedIn and then inviting them to webinars. How does the invitation process work typically?
Yeah, we've also been fortunate in the sense that our founder built the largest independent real estate brokerage in Colorado. And so, we've been really continuing to educate that database. And we spend money on marketing too. And so it's just, we've been getting a lot of cold leads in that way as well. So it's a combination of a lot of push from marketing, spending money on that front, continuing to educate the existing database that's been with us for 4 years. And then the investor relations team going out there and just networking as much as possible. Yeah.
Hitting the pavement, hitting the bricks, doing what needs to be done. Yeah.
That's it.
Hey, Nick, as we're wrapping things up here, where do you say you've got these two nice properties chugging along nicely in your personal portfolio? Where do you see your personal real estate investing go over the next couple of years?
Yeah, I'd like to get these stabilized and sold, generate a return, profits for our investors. And, I think we're really being patient. I'm not in a rush to do a deal by any means. We've looked at a lot and nothing's just really hit our box. But, if we can find properties within that, 25 to 80 unit range that are more of a classic value add, exactly like what we've done, we'll certainly pursue those, but we'll be patient in pursuing them. So we'll see. Take a one underwritten deal at a time and see where it takes us.
All right. And you gave us a pretty good explanation of what you're up to with Ironton. Where do you see yourself and the rest of the gang that's part of investor relations and capital raising going over the next year or two? Where do you see things going that direction?
Yeah, at Ironton right now, we're at about 110 million in equity under management. I'd like for us to be at 200 million, in about 2 years. And I see, myself continuing to lead the investor relations team and hopefully having, one or two others part of the team as well. So I, want us to be a capital raising machine and that's the goal. Just keep doing what we're doing, but maybe expanding the team a little bit more and raising more each year.
Awesome, Nick. And before we jump off here, who are you looking to connect with these days?
Yeah, I'm really just open to connecting with anybody who is a good person at the end of the day. If you're in the industry, you're in a similar position as me. I love to bounce ideas off of you. I love learning from other people and their experience. So if you're a couple years maybe ahead of me, I'd love to connect with you and just see what I can learn from your experience. And of course, investors. So if you're a limited partner and you're looking for some exposure to some other asset classes other than real estate, I'd love to talk with you as well.
What's the best way for people to connect with you, Nick?
Yeah, so they can go to my LinkedIn. It's Nick Elder. Real estate is the hyperlink, but you can just type in Nick Elder and you'll probably see me.
There might be 2 or 3 Nick Elders. So which one are you?
There might be. I've got,
You're the one in Denver, Colorado, right?
I'm the one in Denver, Colorado, and it says Director of Investor Relations on my title. So that's me.
That makes sense. Hey, Nick, thanks for being on the show. This has been great.
Thanks, Dave.
All right, everybody. Thanks for tuning in. We'll see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.u.com.